All right, hiya there, guys. Hiya there, guys. How are we going today? Hope we're doing well. Just let me know if I'm coming through loud and clear, and then we'll rip into it. Otherwise, I'll just sit here and talk to myself, I reckon. No one's perfect, John. Wow, wow, get it. We can take a bit of a different tack today. Hello, g'day, Ellen. So, going to keep it a bit shorter and sharper and sweeter and all that sort of stuff today, rather than been going for over an hour now. It's starting to get a bit slowly, get a bit longer. I'm guessing you're getting a bit bored of me, so we'll probably, I'm guessing most of the time when people get on here, they have an understanding what the market's doing, what happened overnight, so we don't need to talk about it too much. I'll give my two bobs worth on what the market's doing, the indices mainly, and then we'll pretty much just plow into some stocks, look at some stocks. So I guess no more options today. That was a bloody hard push, that one. I think I started talking and then I realized if you didn't know much about options, they can get pretty complicated. Not so much using them, but the actual what they are, a sold call, which way you want the market to go, and a bought call, and the bought put and the sold put, and all that sort of stuff. And then you got all your, what do they call them, butterflies and straddles and strangles and all this sort of stuff. So options is more, if you're a bit of a mathematician and you like to, jigsaw puzzles, options are pretty good, I guess. Yeah, you sucked me in. You sucked me in with Discord. I thought that was a great little topic. I thought, oh, I'll get on there. We'll just start plowing away into that. And then you think, yeah, probably people don't quite understand options and they're sitting there scratching their head. Half the people who understand options are still scratching their head. All right. So yeah, what we'll do, just put in any stocks that you want to take a look at now. Start whacking them into chat. We've got one. We've got WOW. And then we'll just start pretty much have a look at the ASX, what the US is doing, have a quick note of where they're at, and then get straight into the shares. And if you want to look at a currency as well, feel free to put in a currency. It's always interesting looking at those too. Let's get up my drawing tool, and then we are ready to go. All right, right to go. All right, guys, welcome to Trade Setup. We've got the 17th of May, so ripping along in May, getting towards the end of the financial year. So a bit of argy-bargy is going to happen towards the end of the financial year, I guess. Market's down a bit today, as you probably know. It started. I will take a look at that in a minute. It was that 6150 level on the ASX200 or the XJO. We'll take a look at that. Laurent hedging Aussie APT, good work. Yeah, 6150. It provided some resistance. I mean, I didn't quite expect would have this sort of a run right up into that resistance. I expected it to sort of fall short quite a bit before that and then consolidate for a bit for a push through. Instead, we plowed straight headlong into it, and then pretty much reacting off it late last couple of days. So we'll take a look at that. Take a look at the US, what they're doing. Well, let's just get straight into it. All right, let's get over here. So the XJO, you see it's mainly the weekly. That weekly zone just up around that 6150. What's that high? 6150 on the dot, and we reached 6145, 46.8. So a touch below. Okay, so yeah, it's pretty clear what we're doing up there. And this is after breaking 6,000, but if you go back to the monthly, you'll see where we're at. So it was really that 6,000. We touched through that, had a pullback, had another go at it just recently with this move up. I'll spit on the daily, this pop up here. And we're struggling just to get through there. We may just pull back. What I'd ideally be looking for on the ASX is obviously a higher low to see if some buyers can start soaking up that move back, that pullback, and see if we can build and engineer a nice little high low. Maybe something like this was an inside level. And then if we can see a couple of rejection candles, we might be able to get on the right side of another leg up, and which would take us, I'd expect, through 6150. Now, longer term, you can see this is off the monthly. I know that's your GFC, bit of a bounce off there, and then we spent some time consolidating pretty much between 2009 probably towards mid to end of 2011 before we started putting the serious base. This is more reactionary, you had that big reaction up in 2009, bit of a pullback there, tried to go again. That's where your bulls were really given a good nudge. Couldn't come in, you get that secondary wave of selling. And then we started pretty much from, start of 2012, mid to 2012. really started working our way back, and that's where we've been trending higher from. So we had a good push up to 6,000, touched on that, and that was back in 2015. Had a good pullback, but this is the next leg up that I'm more interested in, and I'm expecting it more to go like this one, say from below 4,000 to 6,000, a couple of thousand points. If you're looking five, I'm looking up towards that high. I mean, we've spoken about this before. If this can keep grinding up to the all-time highs up towards 68 to 7, whether we get through it, who knows? But uh, graph is expanding. Oh, thanks, John. I'm a bit slow today, eh? There you go. That'll be better. So can you see that what we're talking about there? We can see we're looking at really this leg up. I'll draw that. So this is what I've been focusing on more on the longer term. I mean, you've got to take into account all the argy-bargy, what's happened in the US, all that sort of stuff. Um, but this is the leg from lows to high. If you extrapolate that out, that'll take us up towards that 7,000, which is, comes in line with that, what do you got, 68 highs, whatever that was. We're taking a bit of a breather here. We've just pushed through the recent high from back in 2015. So obviously not really concerning that the pullback off it, but it happens quite a bit. You can see this time with this leg up when we got through these highs, we had a bit of a pullback, a bit of a reaction on, and then forced our way through it and continued on with high lows. If you go back to the dailies, what I just want to quickly take a look at on the daily is for anyone that's been trading on the way up is just to take note of what's happening on the price action as a bit of a heads up. Now we pretty much you can ideally say we touched that to the T. We've got some. You can see these candles, especially one, two. Well, it's not really coming out. These candles just at the top there. All right. You can see the first one, that green day, was a bit of, and that was after a bit of consolidated just below around that 6,100, a bit of consolidation, holding those intraday higher lows, and then we spiked up into it, but rejected off it pretty quickly. The next day had another go at it, and pretty much finished down, only down slightly for the day. That was your first red candle. Next day tried to go up, finished okay, but in that the second red candle, which was a couple of days ago, what are we now? That was Tuesday. That's today, Wednesday, Tuesday. Yep. So that Tuesday we popped up. Again, we had a nibble at 61.50 just below that, and then pretty much headed south for the rest of the day. And that took out the previous day's lows. So that was a good little candle. That's more of an expansion candle, we like to say, when prices you can just see that it's starting to give up trying to get through the highs, or at least consolidating around the highs. And we're going more to a pullback mode. Okay, and then yesterday, obviously, you had that little pop up. It finished positive for the day, but it really rejected highs again up towards 61.25. And then today, we've opened up and headed south. So we're down 21 points at the moment. Anyone want to see what the numbers come out at, the employment data? I don't know. I only just thought of it then. Let's just see if I can get that out. Employment data was out at 11:30, so over an hour ago. Shows how on the ball with that I am. Aussie employment up. So it's not too bad. Last was down 70,000? 7,000, sorry. And they're expecting up just under 20,000. It was up above 22.6 thousand. Unemployment rate, unemployment rate popped up from 5.5 to 5.6, but unusual. So yeah, that's a bit of a mixed bag on that, I guess. The Aussie, would be interesting to see what the Aussie did on that. We'll take a look at that later. Yeah, back to the ASX. It looks like we are just correcting, or we're just reacting off those highs there, and that is probably expected. We've spoken about it before. We are stretched, from this move up. We're stretched. We've hanging around that overbought on the stochastic. So you've got to look at that as we approach there, as we get up to there, as we're testing 61. How many more buyers are on the sidelines to really give it a good nudge through? I mean, nothing in my mind can pierce from such a low level at 57.25. It can just pierce straight through it and continue to go. If you do get, the market pops up and then you get a bit of contraction back into the range, that's when you expect it to build and start building from just below and then engineering that move up, which could take you up and through. But the fact that we actually reacted a touch, 4 points below that, and we're reacting off there now, it'll be interesting to see how we go. I'm more of expecting this type of action, a good sort of grind higher, and then see if we can find a nice little base to start building, which could take us up and through. But I think that's going to take a bit of time, like we said before. It's going to take a bit of time to work that out, to build that up. Maybe it's going to take, what's this? This one was a month. It popped up through, pulled back, popped up, had to pull back again, but this was a higher low compared to this. You got that sort of contraction in price, and we started to lift from there, pull back high low. So all that took over a month, month and a half. We might get that sort of reaction here, bit of a pullback back to the MAs, bit more of reversion to the mean, and then you'd want to be sitting and watching. If you're really ready to load up into the market, you want to see a higher low start to build on the weekly, daily and weekly charts. So you know that, especially if it's off the weekly, that longer term move is going to be a lot stronger than your daily. We might just spike through a couple of days up and then turn around and retrace from there. So that's the ASX. Let's take a quick look at the Dow. You can see the Dow has just popped its head through that high. And what we call that, I know a lot of people call it a shakeout. We call it a washout. It's more of a washout of that high. And you can see it was a bit of a similar scenario. It's come off a base. And I think price has got to contract a bit more. By contraction, I mean in lower highs, higher lows. And if we just go and draw that up, this was the interesting point. We got up through those highs just there, but really that day it sort of opened, popped up to 25,000, finished back at that zone. Next day was down. Whether we get a bit of a grind back, we washed out, popped up, a bit of a grind back off that zone, and we do the same thing because this big sell-off and what happened is really, obviously, it caught a few people off guard. It really squeezed. So a few people have been hurt in that move. I think it's going to take some time to build. Even though the actual structure is not looking too bad, the fact that we may have seen the worst of it at 23.5 off those lows. Now we popped up, but it's still going to do some work. I wouldn't expect to be buying up at this level on the Dow anyway. I would expect to see it sort of contract off there, build your higher low, and you can see the MAs are starting to come in, meaning they're contracting together. So either we're just going to sit and range trade, bang, bang, bang between the support and resistance, or maybe find a higher level somewhere in there. 23,750 say, and just sort of range trade there while people get back their confidence. The market regains its confidence, but don't forget within the US they've got what is it? Sort of the concern is that they've seen the best of their earnings. Earnings have been, they've been going gangbusters. Have they peaked? Have they seen the worst? So growth is going to start to slow down, corporate growth, and if bonds, don't forget it, actually continued higher. So if bonds are continuing higher, that's going to put pressure on, you'd expect, on shares, and sooner or later people are going to start to go, well, if we can't go higher, what's going to happen? We're going to go lower. So that may be the cause why we're going to back off from here, but then it'll have to be just what happens from there. The country itself, the US, is still growing. They're still going along nicely. Inflation's there, looking to raise rates. You don't raise rates in a bad economy. All that sort of stuff. Obviously, it puts pressure, but it's not a negative pressure as such. When you got growth, you have to cool it with inflation, interest rates. When you got inflation, and it's not a bad thing. It's just that how much has been factored into corporate earnings, and whether they, a lot of people have seen them as potentially growth. Hit their peak. It doesn't mean that you're going to sell the hell out of everything, but it could mean that we might be stuck more in the range, just as everything catches up, and then you start to lift again. We just have to see how it goes. But either way, that might play nicely to a good little pullback on the ASX. Don't forget, they don't have to. They're not going to. One doesn't lead the other, and vice versa. It could just be they're roughly going up and down, very similar, but we might take off and they might be capped because of the all-time highs. They're coming off the all-time highs. Dow, that was Dow. E-mini, the S&P, pretty much the same. It's just washed out that previous high, backed off from there. So we'll just have to see. I don't really expect it to lift from here and take out that high at 27.50 and continue up to, say, 28. I'm expecting more of this. You can see how it washed out the high. Just with that, it's pushed up, pulled back, it popped up off a higher low, washed it out. There would have been a lot of buyers caught there buying because, it's a breakout. We're going to the all-time highs. Off we go. Cleaned them out and then went and reversed all the way back down to the lows. So I don't expect that we're going to go all the way back down to 26, but I'm expecting more because we've come off solid structure there. So don't forget, if you're looking from coming up into this level, we haven't retested anything. We've just sort of that reaction low, that sharp reaction lower. We've bounced straight back again, and we've tried to build a higher low and go. That's a bit different to the scenario now where we've we've got a double bottom here. We've got an inside high low essentially at 26, just above that. So that's why I'm not expecting that savage move down to retest those lows or even push through it. I'm expecting more it to build either range trade between these two or just find an inside level, maybe 26.20, or build a high low. You can see that starting to curve back up again. But nothing goes in a straight line. You're going to have your highs, your lows. I mean, that's what I'm expecting more of that high low to build, spend a bit of time. People build up their confidence and start to work its way back up. But from there, whether we fall off 28, get to new highs, who knows? Right, that's it. So the FTSE, not much there, approaching those highs again. That's just been, look at the, so much for being overbought. That's why you never sell because it's overbought. Sell because of the structure, because you've been forced out. Always let yourself get forced out. And here's a prime example on the FTSE. It was overbought when we were trading around 72.50. It's now at 77.50. So touched on 77.50. It's a 500-point rally you could have potentially missed out on if you're looking purely at indicators and not at the price action, what's happening on the price action. And here, if you're following this up, this is our traditional, this goes for stocks as well. Yeah, but in saying that, I did close out of one. Do what I say, not what I do. That there, that trend up, look how strong it's been. And that's your higher, low, higher, low, high. If you're following that up nicely, breaks through the highs, you raise your stop. Pops up, pulls back, breaks through the highs here, raise your stop, and so on. You might have just raised your stop. You might have tightened right up as we get into these highs. That's fine, but you're still following that trend up. And if the stock, if you're watching a stock that's trading like that, trade it like that rather than just go, oh, it's overbought. I'm going to take something off. I would always be looking at price action first and foremost. Hope that makes sense anyway. CCA, Laurent, maybe it's holding, maybe it's not. Either way, I've just bought some more. We'll look at that in a second. It's technically CCA is not so much. It doesn't look pretty as such. It's having a good little correction. It's more. I'm going off the fundamentals more on that one. They could, as soon as they Ivy Coin list on the exchange, I think that'll go gangbusters. All right. So what stocks do we got, guys? We don't have many on play at the moment. We only have three, I think. Whitehaven. Whitehaven kicked off beautifully. That you can see from sort of here to here in this area, it didn't do too much. We're at 470. We got in and it just chopped around for the good part of a few weeks there. Chopped around and then boom, straight up. And that's quite nice. You can see it's still holding. I'll draw it up. This kind of price action I think is quite handy in, if you don't trade technicals much, it doesn't matter. You just start to get used to these sorts of things. You can see that, and you can see it's just broken up. So, but all this is well below that $5 mark. See, it's sort of contracting in on itself, this price action, and it's enough time to sit there and people are sitting there going, well, I'm waiting for a pullback. I don't think it's going to happen. I'm going to buy on a break up through there, and you probably find the longer it stays going sideways or holding higher lows, um, just below a key level at $5, the higher the chance it's just going to power through, and that's what Whitehaven did, just powered through. So it's taken 1, 2, 3, say 3 days, bang, gapped up, kept going, gapped up a bit, go, gapped up yesterday, up she goes. So we were lucky enough to take a partial. I think we had a partial on this day at 5:05. We got to 5:04, backed off, opened at 5:13. So it was good. I'm happy with that. At the same time, we got stopped out of something else. So that's good. I don't know how, looking at the weekly, how much further that's got to go. I'm expecting more some consolidation around here. This wasn't, a great little move. That was, but you can see this sort of move up here. This is more. This consolidation through here is more on the back of a good move up, which took the good part of the year, from the start of 2016 towards the end of 2016, before we had that minor pullback. We tried to go here, took out the highs, and then boom, straight back down again. Whereas this one, look, we might be getting to the end of this trend. It's been going since probably mid 2017, about a year now, this trend up from this low at 250. So we'll just have to keep an eye on it. But I think if this could just continue up, we've got the next sort of resistance zone is going to be somewhere around here at 575 up to 6. And then from there, it could be right up to 7. So no reason to close out yet. Overall, I would like to see a bit of heat coming out of the market. But by that heat coming out of the market, I mean going sideways. I would rather see it's had a good power up, maybe doing a bit of this. Whoops. Not exactly that because that's horrible. A bit of this, not really doing too much and just squeezing in on itself. And then you've got this type of price, a bit of a wedge but up at the highs rather than have a deep correction going up and then having this deep correction all the way back down to, I don't know, $5, 480, 490. I'd hate to see that. That's not a very strong market if that's going to happen. A stronger market is going to be this type of price action. If we see that, then great. Then we might get that power up to, well, with any luck, up to $8, was it? $7, up to $7. BAT, it's not going so well. That's actually looking rubbish, to be honest. So I'll have to see how that goes with our stop down here at 11.5. Northern Star, the same. I had higher hopes for that. It still hasn't broken trend. It's just the fact that it, with this pop up here, up to 690, couldn't get up through those highs. I'm not too keen on that, but we've got to stop in there. It's all risk management based, so we'll just have to see how it all goes. That's about it, guys. What so chuck in, what do we got? Wow. Let's start first up. Ooh. So this is what I'd love to see with WHC. That's pretty much prime. I don't mind that. I'm just going to check out. So this could easily, on the weekly, it doesn't look as flash. On the weekly charts, so this is why it's always good to go back a step, because you can easily get, and this is where, I'll just explain what I'm talking about. It's that daily strength we just pointed out. The weekly looks a bit, to me, we've got it's holding higher lows here. We're starting to get a bit of way from this support line through here. We're getting a bit ahead of ourselves at around 29, up towards that 29 mark. So we could just do a bit of this. And what I'm scared of is from the daily is it consolidates sideways. We get that little pop up, wash it out. In the same week, we ended up down on the week. It might even be, if we take one step further, a bit like that. Well, that's probably not such a good example. We washed out here, pulled back. We had to take out quite a few weeks of lows to build our high low, pop back up. Couldn't get through that high. We had to have a deeper correction, and that's where we formed this support zone. And this one here is try to back to the support zone. We're getting a bit ahead of ourselves. So on the weekly, there's no reason why it can't take off and extend that. Just trying to look for, you got resistance zone, which is only a touch above potentially, or maybe around that 29 if you take it a bit back, around 29. So pretty much where it is. It might be coming up against it. Otherwise, we've got something right up to 34. Now, I wouldn't expect this setup on the daily to expand up to 34 at all. I'm expecting more, maybe that washout. So if you go back to the daily, washout, and don't forget, we're getting stretched up here on the weekly. So what's the probability from the weekly, and we're stretched on the daily too, that we're going to take out these highs and continue up to 34, 35 or whatever? Does that make sense? But this is not a bad little setup up here. I just think I wouldn't buy it, to be brutally honest, because of where it's come from. It's come from quite a low base. Spent a lot of time through here, but then again, a lot of these sort of, exactly where your risk is if you're going to buy Woolies. Show what I'm talking about. Let me just get that. If you're willing to have a nibble at this, thinking it's going to break out, obviously for me, I'd be buying through the highs. Stop would be there. But below there, you're not risking much. And if it does power on, so be it, you're on board. If it doesn't, you're not really risking too much. It's just that I don't like the fact that the longer if it spends, the stochastics come down, for instance, and get down to say, up around at 50%, but price stays through here, it makes this trade look a little bit better. All right. Does that make sense? Because the sellers are trying to knock it down, trying to knock it down, trying to knock it down. Buyers are still soaking it up above 28.50, between 28.50 and 29. They're still soaking it up. They're still soaking it up. If that's the case, then it makes that breakout look like it would have a lot more oomph, I guess. Hope that makes sense. No, where are we? What was the next one? Wow, no options today. APT. Let's look at APT. And there we go. Excuse me. Yeah, I don't like WoW either. It's got no wow for me. Ha, boom, boom. There's a dad joke, I think. It's not a very good one either. I've done better, I promise. All right, this annoys me because it's actually not looking too bad. It didn't look too bad at all. We've traded this. I can't even remember where we got APT. We've had it a couple of times in the past, done quite well. Then we got out of it somewhere around here. Never got back in. And we might have taken some in here as well. Is this the weekly? It's a daily. The last trade might have been there. Let's get rid of that. I'll worry about it later. I don't know where I've got my list up. But looking at that, I was used to go back to the weeklies there. What I did like about this, and Dav actually liked this one too. It's a good little and it turned out well. It's more of just looking through here. There's a few handy hints that this could move up, and it's a good little stock. I think it does pretty well. So you've got, if you just go back from start to finish from left to right, sorry, it's had a pop up, pull back. It held higher lows quite nicely. Just washed it out. It was a deeper correction, but it was really rejected just after it took out this minor high. So that was a good little correction all the way up here. Had a good pullback and pretty much tried to go again. You know, had one, two, and after this move off that higher low, it popped up, built a high low, tried to go again. If it can't go at that time, that's why it just pretty much capitulated from there. Popped down, built your lower high, come down. But what that's done is cleaned out a lot of these traders over the last probably few months. Anyone that's been buying it through, say the start of the year, have just got cleaned up till about end of March, start of April, just been cleaned up. They've all been squeezed out of the market. A lot of these buyers, probably the only ones really remaining, has had a good correction. But what it started doing is really just consolidating. We just cleaned that up a bit. And you just focusing mainly on this area. It's had that big pullback, popped up off, say, 525, rejected there, only washed out that low with this little candle. You can see that was a little washout, and it couldn't go on with it. So it couldn't get another extended candle lower back into this zone. And this was just showing it's just where the buys, the previous sort of support zone, that sort of key support, was back at that 475. It's falling short. So it's had a good little power into that level. Tried to go again, had to pop up, retest the highs. Okay, they tried to sell it down again, and they fell short of this low. And then from here, once you see, it's really that would have probably been the ideal setup. See these few days, and you've got to put a lot of emphasis on those few days, because don't forget, if you can't, a lot of time, if you can't get through, if the sellers are they're trying to bully it down. People are getting sick of it. They're trying to bully it down. It's come down here, it's popped up. They've had another go, it washed it out, it rejected, bang, straight back up. They've had a third go, fell short. So by the time you get to this stage, if the sellers are going to have a good dib at it, they'll probably let it have a deeper correction and build up a few buyers where they can squeeze back out again. Okay, so what you'd be expecting off this trade, just when we got these sort of few candles in here, was if we break out through this high, you'd think it'd be on and be at least a deeper a correction if it's going to turn negative. But what had happened, it's actually turned out and it's headed straight back up towards that $8 zone again. It's been a good little trade. I don't know if I'd touch it just yet. For me, what I'd ideally be looking for from here is that I'd like to see, it's had a good power leg up, a bit of a correction here with that sort of two legs to take out some of the heat of that move, and then start to hold some high lows and get that little scenario, know exactly what I'm looking for, bang, up she goes, and see if we can power through that $8 level. But yeah, just taking note of what that price action and what was happening down there and putting it in context of the overall price action. You've had this good move up, tried to go, we couldn't do it, had to wash out a few of the traders, put some people back on the sidelines for fuel to come back into the market. Yeah, okay, let's have a look. I haven't seen that. Or did I? Probably did. I'm in and out of that. Is that APT? Yep. So that's Helen's chart on APT. Yeah. So Helen's view here is that we're coming towards that, we're getting to that resistance zone there. I mean, you agree, we wouldn't buy it there just yet. I would be sort of standing aside just for now. So Helen's looking for a lower high. You're looking for a short more than anything, or to sell into and see where it goes to from there. This could be a major lower high. I'm expecting more consolidation through here. This is quite a wide range from this low at 5. What is it? say 530, say 535. The slow through here and the highs up towards 775. Quite a big range. I would expect some contraction and maybe some consolidation. If we get some consolidation, then see if we can punch into new highs. If not, over she goes. EML. Let's look at them. EML probably looks a little bit better, but look at that. That's did that same action. Had a good run up, took out the highs, only slightly washed him out, and then started capitulating here. And we've got that big sell off. Took out the lows. We've come back. Draw that. We've same sort of price action. We couldn't get up. We've had to have a good correction here. This was your anchor at that stage. You got that leg up, pull back, trying to build a new anchor, pushed up, couldn't do it, tried to go again, and then had a deeper correction. Should have gone from here if it was a powerful market. Instead, built that lower high, bang, straight down. And we've just washed out that anchor, not really cleaned it out. We haven't really broken it. So from here, it'd be interesting to see what we powered into a support zone, whether we just back up a bit and go straight through it, or we back up a bit and retest it and then reject and then start building. If we get this high lows after a retest of that zone, good, you might look to get back into EML and see if you can ride it back up towards at least the 220 mark. See if some buyers will be happy to step in with you. Good work. So that I actually don't mind that one. That could be interesting to keep an eye on EML. Remember we've spoken about this before, and this is when you get a price action like this, when it is powered into a zone, like it did here, powered into this sort of 115, 110 zone. And then if you get that sort of, we call it back and fill, it's backing and filling, back up again, it's a little pullback. And then from there, never go, okay, we've reacted off that zone. If it comes back down here, I just want to sit on the bid. Never sit on the bid, because that's what could happen. It can go bang straight through. If you don't run stops, you could be well and truly behind. We could sort of head down towards that 70 mark. And then the lower you go, the longer time it's going to sit there having to rebuild. Because people are going to, once they're hurt, everyone would know. It's like if you've been bitten pretty hard by a stock, you're going to be tentative to jump back into it. I know I do anyway. If I've seen something I've got smashed on, even if it starts looking good again, I'll just get, I'm a bit of I hold grudges. I don't want to get back into it. So that's what could happen if you get this type of price action. And if you just sit on the bid thinking, okay, it's gonna hold that support zone, and just sit on the bid, so the market's going to come down, your orders in the market, bang, it's always going to get you if it goes through. If it's going to drop like a stone, it'll just take you with it. I would be more inclined to see you get this. If I want to buy it, I have to see it prove itself, prove that that's going to hold up with a higher low. And if it gets a higher low, especially after this bit of a back and fill, and then it has another dip at it, it can't do it, then from there it's got to have at least a deeper correction. And then from there you might be able to start, you're going to get something on the, some profit on the table, where you can at least lock in a break-even trade, or at least lock in some profit if it has a nice deep correction from here. But this trading, sitting on the bid with this style of trading, I think it's a 50-50 game. But you can increase the odds by looking for some sort of reaction off there before, and a little setup. You might have to drop down a time frame. If this has happened on the weekly, look for a daily setup. If it's on the daily charts like we've got here, yeah, look, it's still going to play out okay, but you're just looking for that entry setup where you've got, you're seeing that little inside higher low, just for evidence that it's getting supported. And buyers, like I said, let everyone else, let all the other buyers do the hard work for you. Don't be the one that sits on the bid. If you haven't got deep pockets, then you're never going to support that by sitting on the bid. I hope that makes sense there, guys. That's another rant, another Braden rant. What else we got? We'll get Aussie. Actually, I'll get Aussie. Might as well go through systematically. I'll tell you, I'm actually thinking of this. Can anyone see? This is the if anyone can see, this is the Swiss. I think we've got a good little key zone up here. So say 1004 or 1040. You can see that's a key zone, a big bit of a resistance. It's just washed it out, and you can see that's creeping lower. I'm expecting maybe you get a deeper correction because more of a reversion to the mean style of trade, back to the MAs. Well, that didn't happen. Reverting back to the MAs, but maybe on the daily chart, if you flick it down a chart, you can see how it's powered up into that resistance zone, and we could have a bit of a back and fill off that zone before we start holding a higher low and powering through. But either way, that could be a reason to trade short on the, was it US Swiss? But just keep an eye on that one. I was sort of looking at that for potentially a sell through 98, 99.84 with stops just above those lower highs and see if it can power. And if it doesn't get, if we don't take out that low, 99.57, then maybe call it a day. But that's could easily do that. Just look at the way it's been pressured down. All right, let's look at the Aussie. All banged up. Obviously not too bad for the Aussie there. Good jobs figures. Looks like we're coming into that. It's only a minor level. We're on the half an hour chart, don't forget. We'll flick it back to the daily in just a second, but see how we're just powering up to that. So don't get sucked in being too bullish on it, especially, I mean, you wouldn't buy it up here because it is getting a bit overcooked. I mean, I know you could get from 74, 75, 45 up to 70, oh, really 75, 60, say. It might be a 15-bit trade, but your stop, for me, has to be way down here. There's no way that is on the cards for anyone's risk reward. What did that go there for? Is everyone's stream looking okay? Good work, Lauren. I just saw your comment on CCA. So yeah, looking at that, okay, we've pressed low, we've come all the way back. So that's not a bad sign on the shorter term time frames. The fact that you trended down, holding lower highs, you've got to a new lower low, but then you've come all the way back and tested that anchor level at say 75.60, and then we've tried to go again from there. If this is a really weak market, you would have expected a lower high, 50% retracement, roll over again, make a lower low. Instead, we come all the way back, so it's 100% retracement of this leg down, from that 75.60 down to the lows at 74.12, but we've reacted all the way back up again, and then we put in a higher low. So we're potentially going to confirm that higher low once we get back up here. Probably, essentially, you've confirmed that now. So that's not too bad. Obviously, I don't know which way to be biased on this Aussie, purely because if you go drop it down to the daily, this longer term sort of grind higher, we potentially could be rolling over. And if you look at that 30-minute chart, that sort of, we could be down on the daily. Obviously, we're down on the daily. We've just washed out a key level, and we could be backing and filling before building a major lower high and heading south again. And sort of that could take us down to easily 71.45, down to the lows at 68, say 69 cents. So that could be a 500-600 point drop if that's the case. But I think we are looking at the lower time frame charts. We are just washing out that zone, and of course, a lot of the times the currencies will wash it out, and then boom, we might just wash this out, pop back up. But I think the longer term structure is looking a bit weak on the Aussie, but it may just need to come all the way back, build a major lower high, and then roll over. Just have to see. But either way, I mean, if you're going to trade it long, I wouldn't buy it just where it is right now. I'd be waiting for more pullback on the shorter term time frames. Say pull back here, hold a higher low, something like this. Get your entry set up off an inside higher low, potentially like here or in here, and then see if it can run back up and take out that high. But just keep bear in mind that the pressure is going to be on the daily. All right. Close my eyes. CCA, let's just do it for a laugh. The weekly doesn't look that great. You can see that. Actually, it's not too bad. I'm not happy. Obviously, I thought there'd be, if anyone doesn't know the story, we banged on about quite a bit. CCA, you've got not a lot riding on. It's free money essentially on Ivy, but until they Ivy list on an exchange, there's nothing really they can do. They can have as many tokens they want. It's going to be so hard to get rid of was it 16 million tokens? Is it about right? No, I think they might have more than that. They got tons. I think it's more than 16 million. You might know, Lauren. I think it might be 160 million, 120 million. I don't know. But if they're trying to get rid of that size of a position, not on a major exchange, they're going to be struggling. So essentially, they've got nothing up until it lists on a good exchange. So I think that's why, because in crypto, everyone's whinging that this has taken a bit of time with Ivy. Everyone's having a bit of a complaint, but they forget it's being run professionally like a stock. It's like an IPO. Um, and you're dealing with banks. Banks don't move fast. They're not going to move fast. They're not going to be bullied either to moving fast. But a lot of people are expecting this to happen now. It's that Y generation sort of mentality. I want it now, 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 now. Um, so that's why I think people who bought into CCA are not seeing that sort of Ivy pop up, and they're just getting nervous, obviously, and bailing a bit on it. Not massive volume. It's only done 28,000 today, so it's nothing to worry about if you've got it lower. But I still think this good little pullback. I think we'll start to see some buying start to come in. And I mean, if Ivy Coin come out and said, okay, we're listed on the exchange, we're going to list on this exchange, it's a big one, off she goes. That should take off, because that way their token's actually starting to mean something. CCA, I'm kind of I have no experience with this, but I can't. Sorry, Magna, just reading your comment now. I can't see any opportunities in shares for someone with only 30 to 49. 30 or 49 G's. Is that grand? Like a lot of dicking around with that. What do you mean in that respect, Magna? Do you mean in the actual ASX itself is struggling, or just trading itself? Yeah, there's some trading's a bit of an art form, I guess. Right. So we've got PMV. I'll wait for you to chuck something in there. Basically, the idea with trading, and anyone's trading, is I was going to see if it was the right time. Okay, trading's about risk. We're not traders, we're risk managers. You've got to look at yourself as a risk manager. We're not trying to. It's a choppy market. If you go back to your little family man with only 500, look, there's no way you can't make money in the market. But like I said, it's always about risk management. This is what's killed people, and you've got to, you know, once we were starting to pop high here, you can jump in, you get some good quality setups. Just trying to think, if I go back to 2017 was pretty good for us. Probably even 2016 when we started lifting off these highs. There was a lot of little ones running and a lot of little shares, not so much little shares, not your small cap, but your small to mid cap. There's a lot of them just running really well, and the setups were ideal. They were great. We knew what we were looking for. We got the market on our side. As you start to look to where we are today, we're a lot higher than where we were back in, say, end of 2016, 2017. We're higher, right up in the highest. So the likelihood that it's just going to continue higher, it starts, probability starts coming back. You got lower probability the later you are into a trend up, and a lot of, basically heat has to come out of the market before it starts resuming. You're getting the market popping back up, and up she goes. And I think we're at that point now, and that's why it's a bit of a struggle. Probably the last few weeks, it's a bit tougher because you're getting right up to that 61.50. We've had a good run up here, but a lot of people would have been left on the sidelines with this run up. We've had a good ones, but we didn't load the boat either, because I didn't expect it to go, to be honest, didn't expect it to go from 58 to 61, 300-point rally, or 350-point rally. I was expecting more of a pullback. So not loading the boat is a risk management tool for your overall portfolio, but also, just, I guess, what am I trying to say there? You've got to take your quality setups. And I just was not seeing that many quality setups, um, really, really high quality. When the market, I don't think something's going to happen on the overall market. If I think it's going to be a bit of a pullback, I'm only going to take really high quality setups. And sometimes it can just keep you out of the market, and it just keeps you on the sidelines. We've had a few. We haven't been loaded into our 10, ideally 10 positions. We more had, I think, 4 or 5 is what we had at any one time. We've had a couple of shorts in there. The couple of shorts haven't paid off. Previously, some shorts have paid off quite nicely. But it's just one of those things. It's something that if you've just coming into it now, you may find that I won't say coming in at the wrong time, but it is a great time to learn. But to make money, it's a bit tougher. So you're not coming in. I mean, imagine if you come in before the GFC, when pretty much you can throw a dart at a dartboard, pick a stock, and buy it, and it's going to go up. It's a good high probability it's just going to go up. But the same token, if you didn't do something about it, and if you didn't manage your portfolio from a risk analysis and not just looking at gains, you would have got creamed come the GFC. And you probably, if you loaded the boat end of 2017, you could still be sitting there holding some rubbish stocks that haven't really come back since. Does that make sense? That's very true. Can't see what to buy into. I'll give you an example. This is an alert I've just put out. Just 1 second there, guys. Sorry, just 1 second. When the little girls come in. All right, so look at this for an example. On PLS, this is one we just sent in as alert. I don't mind it. I think the fact that you had this sort of run up, we've had a good pullback, good correction, took out a couple of levels with this pullback down to about 80 cents. It's had that, and this is what we just said before. I'll just draw it up. So the markets, it's gone up. Let's just sort of skip a few things. It's got back to the high, failed off those high. This was a minor level. It's taken out that level. This is more of a key level here. It's taken that out too. Okay, so you've washed out with that move. You washed out quite a few traders, and that was traders that have been building a position over 3 months, 2 to 3 months, maybe building in here. They got in a bit late to that trend, but they've been squeezed back out of the market. And you can see once it got down to here, say 77, 78. Okay, we've gone down here. The market's tried to go a bit lower, couldn't, had to back and fill a bit. And what that's doing is really it's like taking a bit of a run up. You stand all the way back and take a good run up if you're doing high jump. The further you go back, maybe the more speed you can get, or long jump, for instance. If long jump you're only running off a 10-meter start, you're probably not going to jump as far as running off a 100-meter start, or you probably wouldn't do that much. I'll get tired before I get there. But that's sort of the analogy. If you can't get through from these sort of lows, you have to back and fill a bit, take a bit of a run up at support, which it did, come all the way back down, but then it started getting held up again. So that's not a bad sign. The fact that it's buyers are showing that they're willing to step in at that zone that's come down. They bought it up here, bought it up, it's come back down, and they started to buy it back up again. And the fact that we've got just here, just below, a touch below these highs, and we're sort of going sideways. Look at the stochastics. There's pressure there, pressure from selling, but it's getting soaked up above 90. I don't mind that. And if we get a breakout, I think at 96, 97, I'm expecting that to sort of continue on. And then your next levels to be worried about, you could be right up to $1.20. So there could be, I don't know, 20 to 30% in that if it gets up there. I mean, if it doesn't, if it only gets to 105, again, we're just looking at risk. If it pops up to 105 and we start to struggle, I might only be 10 or 15 cents up on that trade, but I'm not taking much risk then. And then I just have to analyze it. You can't, you have to analyze it on the fly. You have to take, everything's about probability in my eyes. It's probability of this continuing higher. This is what I'm expecting. I'm expecting to move to $1.20. If it doesn't, if it falls short of $1.05 and there's some selling start to hammer it at $1.05, I might have to think twice and just go, look, I'm pulling the pin on that. I'm going to book some small gains, or at least maybe lock in an even trade. So I'm not going to risk anything and just see if it does pop up. It might take me by surprise and just sellers are coming in and then smash straight through up to $1.20 and so on and just keep going. All right, but there's that there. I've built that position. I've built up what I'm expecting to happen, and I want to see that go through 95. And I guess what it comes down to is experience of what I'm looking for and why. I explained all that to you, what was happening there. And I think that to me, it makes sense. If it doesn't to you, or if it doesn't to anyone, yeah, feel free to send me an email to support@tradesetup.com.au, and we can have a bit of a chat. But that makes sense to me, and it makes sense why. And with everything I'm looking at, and if we get a bit of an acceleration, a breakthrough 96, and we get it with some extent, on volume, so volume starts picking up, it shows that I'm not the only one thinking that, and sort of the weight of numbers are going to be on my side. If the weight of numbers are on my side, meaning buyers, the pressure is going to be to the upside. If not, yeah, take it on the chin. But it is, at the moment, I think you're right in terms of there's not too many prime setups. I mean, for instance, if this stochastics was up and overbought, we get in this setup that stochastics are hanging around overbought, I'd be thinking twice about that, because to me, then that would say how much more oomph, I may get washed out. I might get stopped into a trade and it's just on a washout. It spikes through, stops me into it, and then straight back down again, which has happened time and time again. It's happened lots of times. For instance, go back to this. Actually, when I'm talking a bit of a washout, just look at this high, for example. Oh, I didn't get stochastics. So at that stage, stochastics weren't too high. It was taking a bit of pressure to get up here. If I was going to buy on stop up here, I got stopped in, bang, straight back down. Depending on where I had my stop, which is more than likely here, I've been stopped out, and I've probably just been washed out on the other side, stopped me out here, and it's turned around and gone back up. So that's a different scenario at this stage because you haven't had that retest at the bottom here. That just makes things a lot stronger on the buying front. Whereas here we're just sort of grinding up. Or at that scenario that I mentioned before, you've come into a zone, you're sort of backing and filling. Whoop, you're backing and filling, and we're back up here. That's where we are at that stage, and we haven't come back down and test. And that there could just be backing and filling before we power through, or we do what we did here. We come down and then we started come back up again, and it's showing some good. That's that secondary wave of buying coming in, so it's showing some good support for that stock at that price. Anyway, getting sidetracked there, but you can see looking through, there is probably struggling to get too many that are looking good. Austral, a lot of them have been on a bit of a tear for a while. They've been grinding higher for a while. So are you getting late to a trend? There's going to be times where you can get in late to a trend and you're not. It actually turns out that you're only halfway out in the trend. That's great. But probability is when they've gone up quite strong for a while, it's not new to anyone. There's nothing new about it. Everyone knows about the trade. So there's either people have positioned themselves into it, and then you've got to ask how many more people are left to get in before they're starting to get that wave of profit taking, or whether this is just a great stock, it's just going to continue higher. So it's all, like I said, it's all probability. The way I look at it is a certain way. I'm looking for that, a bit of a pullback, and I'm looking for that next accelerator move higher. And I think by doing that and refining the way I look at things and what I do, I think it shows about 60% of the times my trades work out, and they're more than, and being the areas that I get into, they're more than 2-to-1. So overall, I'm going to make money. I know that just from the stats, taking the stats over the years. Anyway, I think we sort of covered everything. That wasn't as short and sharp as I thought, but might have to call it a day there. Yeah, feel free to give us a yell, Magna, if you want to if you've got a couple of questions, just email them through. I'm happy to have a bit of a chat if you want, just to help out. Anyone else? Have a good day. What are we going to have a good weekend? So we're back in on Monday, so we'll call it a day from here. We're up. What are we down now? 16. So we have bounced back slightly on the ASX. We'll see how ours are playing out. White Havens. Yeah, we're hanging in there. We're hanging in there. All right, guys. Thanks for joining me. I hope you enjoyed that. So just reading the last comments. I haven't missed anything, have I? Trading plan management. Yeah. All right. Thanks very much for joining me, guys. We'll be back in on Monday. Have a great weekend. Speak to you then. Cheers, guys. Bye.